But the point I'm saying is, it's not an easy journey. I want to ask myself, what I can give you is just 20%. The remaining 80% lies in your hands. And I always tell people, my students, conveniently, if you want to pass CFA, you need 3 things. If you don't have these 3 things, Chidima, if you don't have these 3 things, don't sleep. If you don't have these 3 things, you're too quiet. Okay. The first thing you need, I always tell people is ability to read. Yeah, the master of teaching. Master. Have you seen your curriculum? What I have on school, have you seen the print out? There are 6 on the school. Very good. Time. You need time. You need to create time. I can bet you that Chidima, the reason why you did not read for your first example, I can't discuss that, I'm sorry. The reason why you did for very because you have time. How would you read if you don't have time? If you have time, can you read? Very, very important. You can guess what you have get. You know, what am I talking about? The 3 things you need in order for you to finish safe. First, ability to read. Second, time. You can guess what you thought one is. Just try. I don't really believe I'm thinking about it. No, but don't worry. You might trust. There's no wrong answer. Just try. One. Ask us. Something around that. But try again. Something around that. Because, funny enough, if you are not committed, you'll be able to read it. If you are not committed, you'll be able to read that. It's one thing. One thing. Let me help. This adds value. This adds value. This takes away value. Sacrifice. You feel the conflict that you're going to have in this relationship. It's when your best friend calls you and tells you alpha, there's one partner in this alpha, me which one is alpha, yes, we the family say alpha, let's start alpha. During I wrote CFA from 2012, I finished in 2016. I didn't write in 2013. I failed, I wrote the thing twice. I wrote the thing twice. During this journey, well, this point, I became very antisocial. And technically safe that to find who I am today. Before, every Friday night I was I like to invest your neighbors. Every Friday I join that club. Every Friday I'm calling Alpha. What are we going to take? Yeah. But now I can actually sit in my house at night and just know my day. That time is more special than any other time in which we are. People do my life system once in a while, people still calling the system of the biggest level. Still have to mind. But I would say that social life dropped from 80% to 20%. So you need these 3 things. Very, very essential. Don't worry. By the time I don't say it, remember what I said. But one thing you know what I say this? I think we got out something here. I never said anything about you have to be smart. I never said anything about you have to go to the I never said anything like you must have a finance background. I never said anything about you must have a accounting background. Not here. I did medical doctor. I did CFA. I never filled 1 level. They practice medical doctor.
Doctor, the next will be now.
Practice. What did you do now?
The next will be excellent.
It is what is in this material that is going to be asked on the exam. I have seen it over and over again. I told anybody that if you see otherwise, come and find me. Meaning that you go to the examination hall and you see a question that was not in this material. Come and find me. Call me. Tell me Mr. Ben, the liar. As long as you do this material, that's see. And that's why when I was writing my exam, when I was writing my exam for class in this company, what's up? Your CFA has for the benefit of people that are needed. You have 10 possible. You have ethics. You have QM. You have economics. You have FRA. You have equity. You have fixed income. You have portfolio management. You have corporate finance. You have derivatives. And you have alternative investments. I'm teaching you only this and this. Yeah? I'm teaching you this and this. For your level one, these guys are very important. So please, endeavor not to miss your class. They slightly make this guy important, but this is more important. So please don't miss your classes on these 4 points. Yeah? What we do is these 3 are what we call fundamental knowledge. Yeah? So we call that fundamental knowledge. Very true. For you to be in capital markets practitioner, you must understand economics. You must understand financial statements. That's what FRA is about. Financial analysis. You understand financial statements. And you must understand mathematics. Technically, yeah? Now, this guy and this guy are talking about investments. How to be invested money. If you're investing your money, you're either putting it in fixed income instruments, or you're putting it in equity, you're putting it into shares, or you're putting it into alternative investments. Now, alternative investments is what we call things like real estate, commodities, hedge funds, private equity, all these guys come into this. Now, corporate finance was a course that was easy, it's easy, but each time I think about don't worry, I'll explain what corporate finance is about. Derivatives talks about risk management. Now, in the world of investments, do you guys notice there's a divide, very important divide in the world of investments. In the world of finance, in the world of investment, we have buy side, sell side, and buy side. Buy side. Now, the sell side guys, what is the financial market? Which is what we're going to talk about the financial market. The financial market is a space where what? People that want money go to get money. And people that have excess money give those people money to earn what? Returns. That's what essence of the financial market. Now, people that want money are who? Sell-side guys. Money are mostly who? Big organizations, individuals, and all that. They cannot just make up one money. Like as if the market is like another market or like bank. They can't just make up one money and just walk into the market and say, hey, Chidima, give me 1 million. No. You have to get through what we call an intermediary that has been registered and known in that market. So they will work. So when you go to collect a loan, what do? Do you just go and say, I want money now? No. Go to a bank, because the bank is what intermediary. I tell the bank I want money. Now, what has the bank done? Because the bank is also an intermediary, the bank has met the demand. They say, bring your money. I have people that don't borrow it. So the guys that facilitate and help such big organizations to raise money when they need it are what we call investment banks. So most times when people know we are in the investment bank, I say, hey, something's late. Look at the investment bank. While on the buy side is where people like me and Chitima operate. So who are we? Like guys that help people that have money to manage their money. So we help them to go into the financial markets to be able to what? Generate what? Returns. So that's where you have asset management or precisely investment management. You guys know. The only aspect of your CFA that relates to investment banking is corporate finance. That's the only aspect. So corporate finance means they've changed they know they've done now. During my time was called corporate finance. Because of what I just said, they've changed it to what? Corporate insurance. It's no longer called corporate finance again, it's now called corporate insurance. Because that's the only aspect of this that speaks towards the sales side of the market, that speaks to the investment value. While every other thing speaks about what? Investment management. So CFA is teaching you to be what? An investment manager. And I always say this in my class. If you are coming to this class to become an investment banker, or you are writing CFA because you want to become an investment banker, you are wasting money and your time. Because God knows this thing. But that's not doing anything wrong. So, with these few points of mine, I think I can click the ball and start. If nobody has any question. Okay, so equity investments. When you hear equity investment, just think about buying shares. Yeah? Buying shares. That's but there are two aspects of your which you have on the board. There are two parts to your level one equity investment. Part one is general. Talking about the financial market, talking about have you heard of something called efficient market hypothesis? You get all those things now. Efficient market hypothesis talks about while the second part now goes deep or now goes into equity itself. So let's start. So for the first part, there are 3 readings. Do you get any more readings there? Okay. Remember that I gave you 10 courses. Each course has something that I will call chapters, which is the same thing as what? Regions. Each chapter focuses on a particular what? Topic. Yeah. While each reading or each chapter now have what we call sections. Every course has a reading, and every reading has sections. So, in your equity, we have 6 readings, meaning we have 6 chapters. So, the first 3 chapters focuses on the first section, and the next 3 chapters or readings focus on second section. So, Today we are going to talk about market organization and structure. Market organization and structure. Another thing about the curriculum is that this one curriculum it gives you what we call learning outcomes. You don't have to write it in that trash. It gives you learning outcomes. And what I do with the learning outcomes when I was a student, after I read the reading, then I don't look at the learning outcomes first. I read first. After I read, I'll now come and judge myself with the learning outcomes to say, while I read, did I know? Did I learn? Did I get to understand? Did I get to understand? Then the one that I do not know. Yeah, I did not see this one when I was reading done. I'll have to look for it. Yeah? So let's jump into it. So, like I said, market organization and structure. You guys must have gained of markets. This market I'm talking about is financial market. Basically, financial market. No, don't let me call it the financial market. I'll call it the financial system. And every financial system has several markets. And the markets are tailored to several what? Securities. So a typical example is your bond market is a market. It's different from your stock market. It's different from your treasury bill market. It's different from your real estate market. Market is based on securities. And all of them form the financial system. If I talk about credit market, what am I looking at? I'm looking at loans, banks, who is lending, who is borrowing. That's different from bond market. Then when we now talk about the markets, there's now what we call primary market and what? Secondary market. Now, I've summarized everything what you need to be. That's it. But you see the funny thing, I'm sure that I will stop. For you to be a successful investor, you need to understand that market. You need to be able to determine how do I get information about what's happening in that market. Let me give you an instance. Do you go to Abuja market? Just walk on Abuja. Let's go Abuja. I should be at this one. No first time going to that's behind Mr. Briggs. That's behind things. So, you go to Abuja market. Fantastic. Cross you Abuja market. If I tell you to go and buy, if I send to me to go and buy fish at Abuja market, she will come out faster than me. Why? Because she knows that Abuja market is you want that like go to Abuja market every day, every month. If I tell you and him to go to Abuja market, you will come out faster than me. Why? It's not understand the market. But you see the funny thing, if I send both of you to Abuja market and tell you that go and buy the cheapest fish, there is a woman in Abuja market that will find where the cheapest fish is. Both of you will never know. Why? Because she believes in the market. That's how the market works. Stock market. If you want to know the nuances of the stock market, you have to live in that market. There's some nuances that you might oh, I've done CFA. I know how to find present value. There's some nuances that you not really know that a stock program that wakes up every money that goes to that market will be no more than this. So you need to understand the market. In order for you to be able to try to survive this market. So, like I said, every market forms your what? Forms financial system. Forms the financial system. So, what's the financial system? The financial system includes markets and various financial intermediaries that help what I let us do. That help transfer financial assets, real assets, and financial risks in various forms. Listen to the part. From one entity to another. From Tosin to Chidinma. From Chidinma to Biodun. From Biodun to Tenitayo. From Tenitayo to Ahmed. From one place to another. Tosin is in Abuja. Chidinma is in Lagos. Biodun is in UK. Biodun is in UK. Was buying Nigerian stocks and selling stocks to Tosin that is in Abuja. Tosin Abuja is selling it. American Lagos is buying it. From one point in time to another, this is what I like to say. From one point in time to another. Let me give you one story. Building had 1 billion naira. You don't. You have 1 billion naira. But that 1 billion naira, you want to use it in June. How are you going to do? It's the simple question. The simple question. We also has 1 billion naira. But once make it of 1 billion naira in June, what would you do? What will you do?
Make it of 1 billion.
Yes, he has it.
Yeah.
But doesn't need it until June. What would you do?
If it's in the place now for a period of time.
Keep it in one place.
And the market like just things like
It's very simple. Invest.
yeah. Okay, I'll say I'm
Complicated.
so
You invest it. Now, when you invest it, what have you done? Yes, you need it for 1.2 million. 1.2 time. So you have built that money of today to 6 months. Now, nothing. You need 1 billion naira. But you don't have it until June. What will you do? So, finally, you face my question. You have a business, you have done a transaction, and that transaction is going to pay you in June. But you need 1 billion naira to do. What would you do? You go and borrow 1 billion naira. What have you done? You have made 1 billion naira in the future. So you can see that each of you have done opposite transactions. She has money, but needs attention. You have the money in June, but you need it today. What do you need to do? You cross. You transact. That's what, to me, I'm sorry to say, this is the most important thing about the financial market. The most important thing about the financial market. Let me give you my story. I have a bond that will pay me 200 million naira in June, in September. The money is sure, 200 million naira is money. But somebody comes to my office and tells me that if I give you 200 million naira, you will give me 18%. Probably. But I got 200 million naira. So what do I do? Well, I say, well, if I give you 200 million naira, I'll give you back. He said, "Come back." Me and you are brilliant. You give me the money, I put the money 20%. So if I go, that's 200 million naira. Then I can say, I will be for it. And what do I do? I tell my guys, to get that 200 million naira comes, things that they do. So I'm not going to do that. And the last thing talk is, I think about it to say, does it make sense to give Mr. Tunde that 200 million naira? And for him, Mr. Tunde's 200 million naira. So what I'm checking is the value of making that investment today and letting go of that, the cost of maintenance of taking that money today and letting go of that money that I have of it in September. So what is making me do that is the what? National system. So that's the important thing that of a financial system. If you have a financial system and financial system can't give you this value, it's a problem. The financial system has 6 purposes, which is one of what I've mentioned now. The financial market has 6 purposes. It helps you save money for the future. It helps you borrow money. Mr. Biodun was saving money for the future. Tosin was borrowing money. Helps you raise equity capital. Long term level. That's equity. Long term. Helps you manage risk. Helps you manage risk. So let me give you an instance. Which you will learn. As well people that know. If I'm holding a bond, my biggest risk is when interest rates starts to go up. Because when interest rates start to go up, the value of my bond becomes worthless. Don't worry. Don't try to understand as you go along the same line. The information is there. Pump to you. So what's that? I have now sold the bond. So what then? I called the bank and I said, I want to do a report on that. Just say, report transaction for just 3 months. Very to shock. I'm sure you understand what I'm talking about. Every quarter, they are praised that. Shock my performance with the job. I cannot sell this thing. And if I cannot sell this thing, and the fact that I'm holding valuable bond is great. So what do I do? I'm going to be on my banker. I say, to take the bond, give me cash. So what do I need cash? I can remember I didn't get that going on. So I carry cash and invest. At the end of 3 months, what do I do? I take my proceeds from that money, I give the money back to Biodun, I collect my bond and I pay Biodun something. Say, thank you for the service. So what have I used that to do? I have used that to minimize risk. The national system gives you the opportunity to do that.
Why would the bank buy the bond from you? Or why we don't collect the bond from you? Let them get it with
I will let experience to you. It's fine, but I'm just answering that I will not stand too complicated. Okay. Exchange assets for immediate and future deliveries. Deliveries. This is what we call forward contract. You will lay that other derivatives. Yeah. So I can get what forwards talk about is I can get into a transaction with you today. Eh? Do you drive? Do you drive? What car do you drive? Toyota. I want to buy your Toyota. Yeah? I want to buy your car. But I'll pay you 6 months time. Then you want the price. So they're using your car. But me and you are agreed that I'll buy it for 5 million naira. But I'll not pay you that 5 million naira to me. I'll pay you in 6 months time. That's the forward. That's it. When you buy majority of our crude oil are forward contract. How did you somebody that buys forward contract for today? But buys crude oil for today. So all the crude oil that we're producing in Nigeria, already has a buyer. That's what the price is on. Already has a buyer. They already know. So all those budgets they're talking about is crap. Now they already know how much they're going to make from all the crude oil they're going to produce this year because they already make that forward contract on all those crude oil.
Why coming to give us back? Why are they not coming to give us the
That's normal accounting number. That's normal accounting number. Another purpose of the financial system is what? Trade information. Are you guys following the Nigerian equity market? Are you following it?
Yes.
What's the view? You said it's down. So, the whole point that I've been saying is that you have been treating information. Everything we have said is information. There's some people that believe they do that market. In any market is to identify information to move in the direction that market is playing. And follow. Nothing else means. Now, what are the three functions? The three functions of the financial system. Three functions of the financial system. One, everything that we have talked about here, they help individuals to achieve. So they help individuals to achieve all the purposes that we have mentioned. Number two, they help you to discover interest rates. They help you to discover interest rates. Interest rate discovery. So, what's next about this new student model? We don't know the direction of interest rates. So, what is causing a problem now that is making the equity markets go up is because people cannot figure out what the interest rate should be. So the normal guys, like our company, that used to do a lot of fixed income transactions, have all said, you know what? While they're trying to figure out themselves, get those banks. Just banks. Number three, allocation of capital. Allocation of capital. Meaning the financial system is a place that helps people that want money to get money and people that have excess money to go to get returns. Allocation of capital. See this part. See this part. These functions are extremely keyword, extremely important to economic welfare. Let's see. I think you can jump all this now. So I've spoken about all this already. Helping people achieve their purposes in the same. So savings, these are all the things I've spoken about already. And so saving, borrowing, raising equity capital, and speaking about all those. Okay, so let's move on to the next one. So let's talk a bit about This is economics. Yeah, but let's talk about it. How do you determine interest rate? So I'm very good at practice. At every point in time, I tell my portfolio manager, you need to know the liquidity in the system. That, and how to really know the liquidity in the system. One tool that we use is based on auction trades, auction results, treasury auction results. Yeah, and also something we call OBP rates. Yeah, overnight rate times, opening back there. Basically, the liquidity in the system helps you to determine interest rate. Now, economics 101 tells us that money supply, demand for money, and what? Supply of money determine interest rate. Economics 101. If there is more, if more people are demanding for money over supply of money, what happens to interest rates? Is wrong. And when there's more people supplying money and less people demanding for money, what happens to interest rates? So that's why we look at liquidity in the system. The liquidity in the system also to judge supply of money. So if supply of money is excess, is high, there's a theoretical view that interest rates will want to grow. Because it means that everybody that is demanding for money will want to grow. And when interest rate is what? When liquidity is low, there's that assumption that what? Interest rate is high. So that's how the market helps us to. And remember that if you look at what I said before, this demand for money and supply of money is all about what? Capital allocation. If more people want to borrow money, interest rate will go. If more people want to what? Want to supply money, meaning they have excess money. But there's one person I always ask, what's my question? This is the consumer question. They immediately printed 27 trillion. That's a golden question. That's a golden question for FTA. This is not 27 trillion. Yeah. It printed out money one time. This is that much.
Trust me,
I can bet to you also that you know.
because
So technically, there's 27 trillion floating around in this country. And first, all of them have touched that now. One of them have touched that. One of them have touched the money terms.
it will not be that when excess supply
Indirectly. Indirectly. That's why it's difficult. That's why there's inflation.
then
That's why there's inflation, and that's why it's been difficult for interest rates to go up. Because in order to stop inflation, interest rates must go up. Must go up. So, remember I mentioned something called primary and secondary markets. We'll see that very soon. But the primary market is where that allocation of capital really happens. How? A primary market is a market where the people that need money actually go to collect the money. While secondary market is where people that are giving these guys money go to what? Go to sell the instruments to people that probably do not get it. So let me give an example. The Nigerian treasury bill market, we have Nigerian treasury bills, we have the primary market and secondary market. The primary market is where the TMO actually comes to offer treasury bills to us to buy. That money that they raise from that market goes directly to the better world. That's the primary market. When the money goes to the actual person that needs the money. Now, all of us that now buy, all of us that invest in trading goods, we will now, the next day, we will now go to the secondary market and start selling that not ourselves. Or selling to people that we don't support, that will not invest at that time. However, because you now have invest, you now have money to do now, but you still want to invest in trading goods, that's not selling it to them. So, what I'm going to say is the actual allocation of capital happens in the what? Primary market. Happens in the primary market. Now, there's something we call allocation efficiency. Allocation efficiency. Allocation efficiency. See, our market is totally efficient. Allocation efficiency is a situation where money goes to people that actually need this money. Money goes to people that have projects. What's about Nigeria? Do you know about Anchor's growth? Yes, nothing. Brother, stop laughing. Chidima, do you know Anchor's growth? Oh my God. Mr. Building is asking you to know that Anchor's growth. What's in Nigeria? In 2014, oh, was it 20? Yeah, it was 2014. Was apparently this guy's Jonathan started a number. He said what supporting farmers to increase agricultural output. To today, we don't know where to do it. That's so enticing. So that's what I said. We are education, our financial system is what?
Inefficient.
Very inefficient. So allocation efficiency is actually deploying the money and letting the money go to people that have potential products or projects that are productive and add value to the bottom. So every financial market must strive to do what? Allocationally efficient. So right. Moving on. Any questions? Any questions of financial system? Any questions of financial system? So other financial system, we have looked at what a financial system is. We have looked at the purposes of the financial system. We have looked at the functions of the financial system. Okay, so assets and contracts. What are assets? Assets are a group of securities that have the same risk and return characteristics. Assets are a group of securities that have the same risk and return characteristics. Now we have two primary buckets of assets: financial assets and real assets. Financial assets and real assets. Under financial assets, we have the likes of bank deposits, securities, bonds, treasury bills, and all those things. All those things that facilitate financial transactions, facilitate raising of capital, are what we call financial assets. While real assets are those things that you can touch, e.g. commodities, e.g. gold, currencies and real estate are real assets. Then other contracts. Contracts are what? Agreements by two independent authorities. Agreements by two parties towards achieving a certain what? Let me say that this. An agreement, a contract, is an agreement between two parties to carry out a what? A financial obligation. Yeah. An agreement, a contract is an agreement by two parties to carry out a financial obligation. Each. That's when you have your options, futures, forwards. Financial obligation. Classification of assets. Classification of assets. Which is what I mentioned earlier. Yeah. So, hold on. So, I like this. Practitioners often classify assets and their markets in which they trade by various common characteristics to facilitate communications with clients and with each other and with the industry. So they classify assets based on, let me see that, based on what? Certain characteristics. Yeah. So the most actively traded assets are securities, currencies, contracts, and commodities. What is translating those? So, like I said, financial assets, just take that application. Financial assets and real assets. Oh, remember when I talked about markets? And you said markets are, I told you that markets are based on securities. No, I take that back. Markets are based on assets. So your equity is an asset that has, so equities is an asset that has different equity securities in it. So the shares that you buy, the shares of the different companies that you buy are the securities under your equity market. Your fixed income market, your bond market, the bonds, the assets. You have several bond securities in that asset. So your markets are classified or are based or stated based on assets. Does that make sense? Now, let's talk about markets. Like I mentioned before, you can classify markets based on the objective of that market, which is where you have your primary market and your secondary market. So when you say markets classification based on what? Objective. That's where you have the what? Primary market and the what? Secondary market. So primary market, like I mentioned before, is where issuers go to issue securities in order to get what? To raise capital. While secondary market is where what? Investors trade these securities amongst what? Amongst themselves. So remember what I said. In the primary market, funds flow to issuer. While in the secondary market, funds flow to what? Investor. Primary market, funds flow to the what? Issuer. The person that needs the money. While in the secondary market, funds flow to the what? To the investor. Okay. Now, another classification of markets that we have is what? The classification between the money market and the capital market. Now, this classification is based on what? Time to maturity or tenure. So classification of markets based on tenure or time to maturity. That's when you have money markets and capital markets. Chidima, and you need to be way at the screen by trying to figure out what I've done classification based on objectives.
Objective. So
Now I'm
only now
doing
based on
classification based on technical. So trying to maturity. Money markets is where you have instruments that are what? Less than 1 year. Instruments less than 1 year. Less than 1 year is where you have the money markets. While more than 1 year is where you have what? Capital markets. So any instrument that has 3 years should be what? The counter market instrument. While any instrument that has less than 1 year is a money market instrument. That's why I'm big agent of money market funds. That's why money market funds are called money market funds because the only thing they can invest in are instruments that have less than 1 year. Are you guys? Okay. Now, the next classification we have is between traditional and alternative markets. Traditional and alternative markets. Now, what do we call traditional instruments? Traditional instruments are the instruments that we all know. You know, this life, the only instruments, financial instruments that we have in life really are either what? Equity or what? Fixed income. These are what? Traditional instruments. Anything outside equities or fixed income instruments are what? Alternative instruments. So when that's when you tell when I say that's like what we are telling your customer. You have fixed income, you have equity, and you have what? Alternative investment. That's what I just start from. You have equity investments, fixed income investments, any other thing outside these two are what? Alternative investments. So anything other than equity and fixed income will be taught in your what? Alternative investment process. That's when you have your hedge funds, your real estate, your commodities, any other thing after this two, that's pocket investment. Yeah. Here. Any questions? Now, let's move to securities. You remember I told you what did I tell you? You have financial systems. Yeah? Under financial systems, you have financial markets. And your financial markets are determined by what? Assets. Now, what do you have under assets? You have what? Securities. So, technically saying, this is what I'm saying. Let me just write it out. We have financial markets. We have financial systems. Yeah? Under financial systems, we have financial markets. And these your financial markets are technically defined by what? Assets. Now, under your financial markets, that are defined by assets now have what? Security. So it's securities that trade in the financial markets. And the financial markets that make up the financial system. Makes sense here? You're those good stuff. Don't see any questions for now. We're moving good. Now, in order for you to sell, in order for you to raise money, I've said that several times, you issue or sell securities. And these securities can either, remember all the mentioned, can either equity or fixed income. Can either equity or fixed income. So you are either issuing fixed income securities or you are issuing equity. Fixed income securities are what? Basic. That gets. When a company issues a fixed income security, either they issue a bond or they issue a commercial paper or the government issues a treasury bill, they're all what? Borrowings. The government or the government is technically what? borrowing. So, and remember, if you borrow, you are at the obligation, contractual obligation to pay me back my money. So borrowing is like an agreement. So every fixed income security is like an agreement, a contract that is signed between the person that wants the money and the person that is giving the money. So there's an obligation that you put that on you to pay me back that money. What are equity instruments, equity security? That's what we came to this man to check about. But we're not going to go deep into equity here. Just surface level. When a company issues equity security, what is the company telling you to do? Company become a particular problem. If I come to you, Tosi, I say, Tosi, I want to give you shares. I want to give you shares in the company. I'm telling you the world. But the investment automatically becomes what ownership stake. You see the difference between fixed income investment or fixed income securities and equity securities. The equity securities do not come with what an obligation. They do not come with an obligation. Meaning that I am not obliged to guarantee the safety of the money. If my business does not do well, the money has rent. However, you are entitled to some things, e.g., you are entitled to collect dividends whenever I bring to you. You are entitled to vote way out of the business. You don't like that first. You are entitled to also what? To own the next asset of the company upon the what? The liquidation or liquidation of the company. Let's just call it liquidation. To say after the company has sold off all its assets and we have paid off all our blessing, whatever is left, you are entitled to it. It's doing like as an equity share, as an equity investor. It's an investing in equity securities. Yeah. So right. Now, there's something called pooled investments. Like I'll teach you guys in portfolio management. Yeah, pooled investment. So pooled investment is an investment vehicle that grants you ownership to whatever you use or purchase the funds that the vehicle has raised. Does that make sense? How? Let's not make sense. Does it make sense? Chilima does it make sense? Full investment is a vehicle. Let me come out and say it. Full investment is a vehicle that allows the owners of the vehicle to raise money from different people towards a particular objective, which is most likely to buy or make an investment, such that everybody that has put money into that firm has a prorata share in the value of what that investment is. I've said something different about the rising fund. I'm not telling you. That's what we do. Should I take it for you to write it? Or you don't need to write it, no way. When we get to portfolio management, I will talk more about it very well. But what that's not the thing with investments. Yes,
Okay. So let's say as we are in this class, we decide to
buy this building.
buy this building. So we all contribute money, we get the building bonds, and then we decide to use this building properly and manufacturing center. Whatever comes out as profit at the end of the day, shared by everyone in this. Whatever happens, share that and you. If it's school, we all share, we are
So it's a sort of imagine that an investment vehicle that allows people to share investments. So let me tell you why I like this. Yeah. I've been saying this is testnet. She can say that this is share so the who was an investment vehicle. It's not a company. The investment vehicle that it was the people that contributed to the money that was used to buy those assets in share. Meaning that people that contributed to that entity that I'm talking about were up to like 6 entities. Just 7 entities. That's very that company, it's not a company again. That bank is a important investment vehicle. Stop that. Whatever that bank benefits from the ownership of those share assets, these guys will share it in line with what they are contributing.
The whole night of jumping right next time.
I should definitely get the Bible. Because it's not me.
No, I'm not saying for sure. I mean, it's out of their own major value.
Let's don't go deep. Have you ever told me about omnibus investment?
When they want.
So this mortgage is different. So this is bank. Yeah. Who has created an investment, not an investment vehicle. You've created, how do I put it now? Yes, they've created a securities account in the US. Yeah. Such that anybody that wants to buy shares in the US, they buy it through the securities account. But at the securities account level, they have a register of who is voting. You're getting my point. Now, the difference between this and an investment bank is that, which you learn when I get to portfolio management. If Chidima can just say,
As in, I can't just sell.
can't you say? Yeah, that's my point. Don't worry, there are times when I don't do that. Chidima can just say. When I get to portfolio management, Chidima can just say.
But I think it's better now. It's not true. So we know how to like then
So if Chidima wants to stay, is that Chidima sells to all of us inside? Because we don't know if Chidima was not telling to one person after the other person might be with. So we have right of first refusal to say, before you say, let's go must die if all of us can make it back. They are getting about we did it together. But in this case, because they have a register of who wants what, if Chidima comes down and says she wants to sell 1,000 units of Tesla, if Chidima says she wants to sell that 1,000 units of Tesla, what they do is sell 1,000 units of Tesla, they push 1,000 units of Tesla to the market. And they know that when the proceed is coming back, you know that it's for what? It's for Chidima. That's what we call an only bulk investment structure.
it is true now that all of them are together. Who brought them together? I feel like they're maybe friends. They're not here to determine their
Fantastic. So there are different structures which I'll teach you when we get to like that. There's something we call a fund manager. So is that fund manager that brought all of you? So it's not really a mutual fund. That's the mutual fund structure. So in the mutual fund, yeah, in the mutual fund flow, do you think you are selling it? You know what's happening? The fund manager is buying wrong. So every time you come, I say you go to trade, mutual fund price, mutual fund manager, fund manager price wrong. I say thank you for being with us. Take your money, collect your bills back from you. I wish you somebody else. Oh, that's it.
So will that not affect the fund?
How?
Like, if like in part of fund that in the particular value and like said I don't want to get by cost. Should my cost down, but I will make the value the inflation.
So what we have done, which I don't want, I don't want us to get into, we talk about in detail in portfolio. We have now used what we call a unit system. So it's like shares. So if some of you go, just what I'm saying, two things happen. The value of the fund comes down, but the price might literally still stay the same. Why? Because we're viewing stuff. Explain. Does it make sense? You have 10 million naira that has been given to 1,000 units. So the price of this unit is what? 100 naira. Right? So if the value of the stock from the number of units like one people, that's what? It's 200. I guess if we do 200 multiplied by 200 multiplied by 100 is 20,000. If we remove 20,000 from this, well, remove 200 from this, is what? It remains private. Okay, so moving on. Currencies, commodities, and real estate. This is more of what? Alternative investments. Let's give me one. Okay. So, currencies, commodities, and real estate. What are currencies? Money issued by what? By national monetary authorities. Currency is a country's what's that thing called? Medium of
Exchange.
medium of transaction. So every country has their own currency. Yeah? And we have people that the only thing that we do is they trade currencies. And the currency that trades in what? Foreign exchange markets. So there are people that they do exchange there. Some people they do is trade dollars. Some people they trade different things. So they submerge themselves in the foreign exchange markets. We're trying to understand what is happening in other countries, to know which countries currency they should buy, what they should sell, and all that. That's the market that I hate. I hate that market in town. It confuses me. So I try to get to stay up on it. That's the market that I don't think that market is needed. But you know, you guys, we have what we call reserve currency. So the primary reserve currencies are dollar and euro, while secondary reserve currencies are pounds, yen, and Swiss franc.
Well, organically, like the conference was like most of the time in finance, as a lot of this finance, what people do is people also pay the needs for themselves. And just because of people just because of money. And we know like one type of bond, they don't know one type of bond. So when I want to do policy, I just pick up one type of policy and they'll just be there. It's like
So you know, like finance division. How many things have I spent now? How many market training points? How many security analysts? I choose to train this stuff. So let me give you an instance. Stay safe. Did you know that? Yeah? No, don't let me say you know that. Our equity guy, I looked at it. When I was scamming, I was very effective in this meeting. I don't do it. Because of my love of equity, I knew the people scamming and I knew to stop looking for. And I just stopped looking for to start to where I am now. And I have no big money for it. The right, I can only start. They're taught, yeah. Now, the reason why is because I got into an organization where my board, my director, and everything, their preferences are fixed in there. So I've submerged myself in the fixed income space in the last 1 year. And every time I look at this market, feel hard. So this year, I made a good deal. CFA, I don't know where CFA material is still realistic for anything in this world. If you have CFA, no. You can excel in anything in this life. And I don't know, but you know what I mean? I want to outsource it. So I have to call 5 firms, but I know they are giving me everything as and they will know it to manage. And they'll be profit for me. So rather than me every morning looking at this market and getting a chance, wow. I know what that does for me. That allows me to continue to do what my organization wants me to do. The only thing that they will ask me on the last day is, are you sure? How do you monitor what these guys are doing? That's all I say. Commodity market. They are going to see next. Commodity. Commodities market that you are seeing. There are opportunities in this marketplace in Nigeria. Share has not carrying my risk. I'm carrying my name to the and saying, why are you focusing on the fixed income market? I should also focus on commodities. No. What's there to do? The same thing. And this was the people that are playing in the elite component. And the guys have for money, but not to give you happy money. I said, okay, why not? Nobody will away for money now. What do I do? Give them money. So right now, I am claiming I have exposures this year already. While last year I had only exposure to fixed income market. Now I have exposure to fixed income, equities, and commodities. How am I doing it that I have exposure to equities and commodities? I also speak to people. Finally, I focus in my fixed income market, and the fixed income market has given me a fantastic money already. What did I say before? I said in November rates were high. Now rates have declined. What did I do in January? I sold my bonds, sold my treasury.
So the
Wait again for the market to get
My follow-up question would be, how
that means you help them like available. You didn't help them to maturity.
that doesn't maturity.
no, you don't have to always look to maturity.
I thought enhanced maturity policy. That's it.
Am I with president?
Oh.
I'm an investor. I'm not holding bonds. Am I regulated by president? Since that's I'm an investor. I bought bonds. Bonds were doing 17% in November. I bought. I said, hey, based on my experience, bonds have never got into 20%. The day they decline, what do I do? I said, voila. By January, everything has fallen. Bonds are falling to 14%. Treasury bill that was 16.5 has fallen to 8. So then it's carrying going down to the next level. Waiting for them to carry this up again. When the carry is going to be like that. Simply.
So how do you want to the idea of this?
Although you know, you come to by the time you're done yourself, you don't come to me. I hated 61. This town was not. Everything was very deal.
Sorry, I want that.
So sorry. So my issue with everything is, well, I prefer to do everything myself. But my company is still trying to stabilize. Yeah. So the question is, when I stabilize, will I lose out on all these opportunities that went through my hands? Oh my God, I was shocked with stabilize. When I stabilize, I think I'm going back and start managing my business. So at that point, I can sit in the market for now. I can't sit in the market for 10 to 2. Because if it is one who come for meeting, come and look at this thing. So by the time everything stabilizes, where I can sit, close my door, lock my door, when it comes to the store, and I stay in the market from 10 to 2. When I start managing this business. I'm sure you're going to say something.
Sorry.
Okay, commodities. You see the issue with commodities. Commodities are funny. Why? So you have different, there's something we call spot markets. And there's something we call forward markets. So what are spot markets? Spot markets is when I come to building and I say I want to buy it using that. I want to pay it using that. So I want to okay. So moving on. Spots and forwards. Spot market is where you buy a security and you get delivery immediately. Meaning that I buy this car now, I give him money and I carry that car and I drive it home. That is a spot market. While a forward market is a market where you pay, you agree today, but you pay and take delivery in the future. You pay, you agree today, but you pay and take delivery in the future. So a forward market is me and building can agree to buy a car, for me to buy a car at 5 million naira, but I'll pay him at the end of February. So it's at the end of February, I pay him this car and I collect the car. That's the forward market. Majority of the commodities market are mostly what? The forward markets. A typical example of your spot market for commodities is your what? Now 12. Where you go, you buy cartons of tomato and pay your revenue. Ordinarily, what people do, people that buy in tons, what they do is what? They would have agreed price to you to take delivery of it when. So they will agree price during what? During planting. To take delivery during what? Harvest. Now, so that's what happens in the commodities market. Yeah. Okay. Did you know that? There's some people that hate me investing. That's all. That's really true. That's what tell me assets. So they go for options. Have you guys watched? Do you guys watch Netflix? There's a movie on Netflix called Lift by what that guy that's from Kevin Hart. Yeah. So the people that that's it. He kept telling them that he doesn't steal. Because he thought he said it's a thief. He said he doesn't steal. Think that what he does, when he said it, he was later I think he got fear in the bastard. So what does he do? I come to Chilima, I come to Chilima, I can get you a particular artwork. Let's agree on the person. Yeah? And what happens? That grow the price of let's say $200 million. Now, what do I do? I'll start looking for whether I'm at home with auction. Then I try to disrupt the auction so that I can buy it at a very interesting price. Now, when I get to the price, what do I do? Before, when I get the artwork, what do I do? Just move it to the around and I collect my money. Collect my profit. There are some people that's the only thing that comes. They come to the primary market. That's it now. They come to the primary market. They've already agreed the price at the secondary market. They come to the primary market and they do what? And they get it at a cheap price and they float it at what? Secondary market. It's good. Everybody's aware to the visual. That's the real asset. Now, the problem with real assets is that most times you cannot do direct investment. Only if you are a big boy. If I tell you to go and buy a plane now, that is my point. Do you get it? So, what most people do is you do what we call indirect investing. Indirect investing. So, an example of an indirect investing is that was your own investment structure, which is so we have created an instrument that you can easily invest in. That instrument is the underlying of that instrument, or basically another thing is to create a derivative. When the underlying of that derivative is what is your real estate or your real asset. So a typical example is that you need know that I invested in the instrument that you're investing in, while the underlying asset is property. So a typical example is nobody really buys for investment. It's only refineries and all these guys that buy. So what people really buy, that they trade the world, what they really buy in futures contracts in the flow. Yeah, that's my point. Because the underlying asset of the futures is what the future is what. So if I feel that crude oil prices are going to go high, what do? I buy futures. If I feel prices of crude oil are going to decline, what do? I sell futures. You will never always don't like everything. So you have direct investing in real estate generally requires substantial management to ensure that assets are maintained. We don't really do that. So let me give an example. If you buy crude oil down, where you want one? You can find out where you want one. So we don't really buy. We don't really buy real assets. They look for indirect investment. They look for instruments that they can buy that give them access or exposure to real assets. Okay. Any questions? Yeah, you can see that I'll move to contracts. I'll move to contracts. Remember what I said? The contract is an agreement amongst traders to do something in the future. And that future is a what? A financial obligation. To carry out. So you are making an agreement to carry out a financial obligation in the future. Yeah? And your contracts can either be forward, futures, swaps, options, or insurance contracts. The other and the insurance contracts in derivative. In derivative. When you get to derivative, you understand better. The value of your contract is dependent on the underlying assets. The value of the contract is dependent on the underlying assets. The underlying assets can be anything, or mostly the underlying assets are majorly commodities. Remember that about I'm majorly opportunities. Majorly opportunities. Now, your contracts can either be what? Physically settled or handled. Meaning that the car that me and Yogi want to get into a contract on is a forward contract. Meaning I buy, they agree on the price to be, which is 5 million, for me to pay in future and collect this car. Now, in the future, let me tell you what physical settlement is. In the future, I can just say, Mr. Yogi, give me your car, take the 5 million and I bounce. Or that is physical settlement. Cash settlement is I tell Mr. Biodu that Mr. Biodu, I don't want your car. Why? The value of your car now is 6 million naira. So rather than you giving me 5 million naira, give me 1 million. So that I can go and buy the car myself and outside. Does that make sense?
But the 1 million is the difference.
Yes. The 1 million is the difference between the value of the car in February and what we are doing. So I don't want your car. I don't want it back. So let me explain. Because it seems there's a bit of confusion. Yeah. If I collect this car, what do I want to do with it? Remember that I paid 5 million for it. If I collect the car, there is now value at 6 million. What will I do? Don't sell it. I collect 6 million. So what am I doing? I've paid 5 million. I have agreed with Chidima that I will sell you this Toyota in February. You understand my point? The Toyota they come, don't worry, I will give you. Don't worry, just calm down. In February, I will give you the car. Chidima is waiting for me. February comes, Chidima, I may invest my time. I say, you know, Mr. Belgium, and by 5 million, if you want to give me your car, what do I do? I give it to Chidima at 6 million, and I collect what? 1 million profit. Or I can go to Mr. Belgium and say, you know what? I don't want your car. Because the car now is what? 6 million naira. Give me my 1 million naira, then we can buy the car myself outside. Because your car is white, I don't want to buy it, I want to go and buy it. Does it make sense now? Sir? The flip side is if the car's value is now 4 million naira, I will give it like 1 million.
That makes sense.
Eh?
You not collect the car.
That's what I'm saying. Like, I collect the car for me. That's 4 million naira. You do what? So instead of me giving him 5 million, I'll give him 1 million and tell him that, Baba, keep your car, take 1 million, and I bounce. Does it make sense? Because if he wants to sell the car now, he will sell the car at 4 million and add that 1 million to make himself pay. So people remember when I said you use derivatives for risk management. So this is where people use this for risk management. How? Remember that transaction I told you about? That's very example. Unless you go make it more less. That will take most bad people joining to find them. And he has assumed that based on his production, he will need crude oil in March and January. Then also, he has also projected that if he waits till March, crude oil at $77 now will be $90 because of something that's happening in Saudi Arabia. So what does he do? All Mr. Blakely as if Mr. Blakely, I want to buy crude oil forward for delivery in March when my inventory will be going. Now, if Mr. Biodu knows the information that I have, what would Mr. Biodu do? Mr. Biodu will say, no, shoot. Crude oil is only inventory that's fighting. I don't want. The crude oil I want to wait till March to sell it. But before I know that in March, it will be 90 naira. Please take it as another. But you see, the more I talk to people, there will be one person that doesn't know this information. So that one, if it's Mr. Building again, you think that it's smart. So all of a sudden, you say, food oil is 77 naira now. Let's do for it. Now, say, Baba, calm down, let's do for it. No, that's what you want. I'll do for it. Sell that. You sell $2 to be much. I will pay $80. Fast forward, March. Mr. Doyle, how come my $2? Mr. Doyle, I cannot say it's $2 again to you. It's 99. How will I not say it's 99? I'll be calm down. At the side of the without you say, see, I don't have a sign. So what am I taking myself like this? The fact that I have not buying people their parents and don't have me. What is that? But you see the flip side is what if who doesn't even get the next plan? Who does you make that same I'll be paying me more than was my so it is a one thing about forward which you learn on the abilities. Forward you can either win or lose. But options, yeah. Sorry, forwards and futures. You can either win or lose. But options, you can not. You can only be. You can only win. You can decide not to be the full self. And I can decide to say, Baba, who will come to them. Meaning that if you can say, I'm not thinking, Baba, I don't need to know this. No fit, I don't need to know. I don't want to. But let's back with fear. Don't get it. Then our one step out in the market. That gets my point. So we learn about all that, Chima, I live because we are looking tired. It seems like this office everything. So that's the problem I have with eating. So at work, I stop there, I don't eat too much. And they tell me why. I said, because once I eat like this, I was thinking about sleep. So I eat light immediately. Okay, so let's move on. Let me see what we have next. If I'm going to decide if we're going to continue. So all these guys on swaps, options, all these things, you never go through the okay, let's end it here. I think this is a good place to end it.